Welcome back to the More Than a Broker podcast with Spot. I'm Andrew Kropp, CFO of Spot Freight, here with my repeat guests. Excited to have them back again. Theo Mascari, National Account Director here at Spot, and Ryan Scott, our Director of Carrier Sales. Welcome back, gentlemen.
Thanks for having me.
Excited to have you here on our kind of mid to late June recording session. I think it's always important to think about when we're recording these events and kind of the state of the market that we're in. So jumping right into it, we're in peak season, I would say leading up to the true kind of peak of peak season right around 4th of July. Let's start with just a general assessment of what you think in terms of where the market stands today. Theo, you want to start us off?
Yeah, I think peak season for produce, we're in full swing. California, Arizona, Southeast markets, capacity certainly tightened in those regions. Everything's domestic on the produce sector, so you're going to feel a little bit of a struggle there. Seems pretty normal right now. Nothing kind of out of the ordinary.
Right.
Had some tightening towards the end of May with road check week leading into Memorial Day weekend. And we're kind of seeing a little bit of a correction into the shipper's favor right now coming off that, which is a good thing for everyone.
Yeah, certainly something I was curious about is the extent to which you've seen a rebound from those, weeks that are always tight as we start the season. You feel like the rebound has been typical for what we're used to seeing or atypical for this year?
A little atypical from previous years. Usually as you lead into the 4th of July, it continues to get tighter. Capacity does in California, Arizona, Texas, and the Southeast, but we're seeing a little softening.
Okay. Ryan, what's your assessment of where we are right now?
Yeah, I think the few weeks in mid to late May were definitely, you saw a noticeable tightening in capacity. June, it's lingered a bit, but not to the extent we may have seen last year even. So definitely a little bit more subdued now. Spot rates have risen a little bit since May even, but I think a lot of this is happening in specific pockets. You mentioned a few areas of the country that we're seeing most of that tightening. I think broadly speaking, it's still pretty soft, still, a lingering capacity out there. So not a real tough environment right now, but I think we're seeing certain areas of the country that are still seasonally tight.
Right. With the market being a little softer in terms of big picture, kind of comparing peak seasons year over year, any sense of what you think may be driving this? I mean, I've read a lot. We obviously have tariffs as a big backdrop to everything that's happening, and I think the up and down cycle that we've seen with tariff activity. Demand seems to be somewhat soft in terms of shipper volumes. Is that consistent with what you guys are seeing right now?
Yeah, I think so. I think one word we've said a lot recently relating to tariffs is just uncertainty. I think a lot of that has played into the demand aspect of it. I know as we talked, interest rates drives a lot of that consumer behavior and construction and different things that lead to truckload freight. The news yesterday on interest rates holding steady again. Right. Once again, another indicator that we might be a little ways off of any real demand shocks. So right. I think there's a few things at play right now.
Yeah, housing starts haven't been great, so construction volumes down, flatbed demand, always tight this time of year, but not at some of the extreme levels we've seen historically. I guess maybe talking a bit about the capacity side of where we are in the market. Couple notable developments, I would say, on the capacity side with English language proficiency standards coming out, with the FMCSA cracking down a little bit on carrier identities and validations for new authorities. How does all that add up to your side of the world, Ryan?
Yeah, I think just speaking to some peers in the industry and reading some of the comments from some of the large fleet execs, I think the larger fleets are excited about some of this because I think those compliance, and safety standards are largely there, and so I do think a lot of the smaller fleets that may be on the fringe of some of those operating guidelines could be at risk. And I've heard anecdotally some smaller carriers electing to sit out even Blitz Week, not for some of the normal reasons they would, but just with uncertainty and not knowing if some of the English language proficiency would be enforced, and just some confusion around some of it. You've also got the crackdown on illegal B1 visas with the cabotage laws, just things that have been around a long time but just haven't really been enforced.
Right.
And I think sometimes even just the threat of enforcement can cause some of this. Especially, so I think there will be certain markets to keep an eye on, the southern border, some of the southern markets in particular. But
Right.
I think more broadly, over the next few months, I could see some capacity exiting a little more quickly, and some of the larger fleets probably benefiting from that.
Yeah. Theo, have there been a lot of conversations with shippers in terms of some of these changes to the market and how they expect to be impacted?
Certainly had some shipper concerns in what it would actually do to capacity. Everything you read out there, no one has an exact figure on what that number is, how much it might pull. I've read anywhere from 3 to 10%.
Yeah, 5 to 15 is the number
Right.
I've seen, so
Yeah.
somewhere in that range. Yeah.
Yeah, so pretty significant if it is closer to the 10%, but any low percentage would certainly have an impact on pricing and capacity. I think as I mentioned, like the seasonal areas, produce markets is probably going to be the heavily affected. Being border states, you're going to have drivers that English just isn't their first language. So I
Right.
think those would be the ones that are impacted the most, and where shippers might have the most concern.
Right. Yeah. We have seen capacities increase, though, to start the year, I think, on balance, or at least the last couple months. If you had to say how close we are to an equilibrium in the market right now before taking into account something like the ELP, the proficiency standards, where would you assess that right now? I guess maybe Ryan, you take that one first.
Yeah, it feels like we're close.
Right.
There's still some headline-making exits, but for the most part, I think just signs like DOT week and where we stand now, it feels like we're not really, spot rates aren't really dropping further.
Right.
They're kind of just sitting still or increasing slightly, and so I think those are signs that feels like we're close to equilibrium.
Tender rejection is up kind of off the floor level, but we're still 5 to 6% on the dry van side, probably low teens on the reefer side. From what I've seen, which I would agree, kind of feels like that natural equilibrium point, but doesn't take much of a move on shock to the capacity side of the equation for that all to turn upside down in a pretty short order. Turning to maybe the outlook side of this, we do have 4th of July coming up in a couple weeks. Let's start with what your expectations are as we head into that part of the calendar, just in terms of market volatility, in terms of rate pressure, et cetera. Theo, you've been around this for a long time.
Yeah, I think with 4th of July, I think we're certainly going to see some tightening as we normally do. You're going to have an excess amount of grocery products shipping as people have their Independence Day celebrations. So I think we're going to tighten, and it'll probably stay a little tighter for the week after 4th of July. But I see this being pretty typical, where your southern markets and California and Arizona start to cool off a little bit. I'd say the only thing that would have the impact is because there's been a trade deal reached with China, there's probably going to be a lot of imports coming in to the West Coast. That'd be the outlier that I would probably look for. Outside of that, it could be pretty normal.
Yeah, and it'll be interesting to see if that fully materializes. I know some of the container activity rebounded, but it wasn't the sharp spike from at least data I've seen in the last couple of weeks here. You guys have seen similar, or any other thoughts on what may happen on the port side?
I think some of the port activity on the West Coast has been down pretty significantly. But yeah, I think we should expect some of the normal 4th of July, some of the summer peak consumer product type shipping activity continue, and that should tighten things up a bit. But again, without anything driving housing activity and some of the large, big purchases that are going to come from people loosening up their wallets a bit, I think that's going to be tough to see a much bigger impact than something that comes and goes pretty quickly.
Right. And maybe lastly, we'll ask you to dust off your crystal ball even farther. Let's go beyond 4th of July. What do we see as we head into the fall? More of the same? I guess we'll kind of stay tuned to what happens with demand levels. Capacity continues to adjust. Anything that you guys think might be different as we look farther out on the horizon?
I think fuel prices is certainly could have an impact. I mean, they've been down year over year substantially. We're up currently due to some conflict in the Middle East.
Right.
And if that draws out, I think fuel prices could go up, and that could potentially have a little bit of a strain on capacity. So I can maybe see some tightening towards the end of the year if that conflict isn't resolved.
Right.
Because it'll heavily affect fuel prices, because fuel prices being low is certainly benefiting the carriers, and having them hang around a little longer, it's keeping that capacity in the market. So I think that's something to watch.
Ryan?
Yeah, I think it's a good call out on the diesel cost side of things. I mean, we've been trending down significantly over the last year, and now we saw a 10-cent increase over the last week. So I think just seeing how quickly that can rise, and I don't expect that to continue week over week, but that is a good call out. And I think, unfortunately, there's a lot that none of us can predict with a lot of policy uncertainty right now and interest rates. It's hard to say there's much else externally that's going to cause enough of a demand shock to really shake things up between now and the fall,
right,
until we know more about that. So, I mean, not the most bold prediction, but I think that's unfortunately kind of the world we live in right now.
I think that's where we're at, right? We don't know what's going to happen with demand. It's soft, but there's still a base level that's there. The capacity has continued to slowly erode. Is that going to change in a meaningful way? Is probably the thing that's going to move the market next. That would be my 2 cents on it. Any parting thoughts, fellas? Anything else you wanted to cover while we were here today?
I think we've covered it pretty well.
Okay.
I think so too.
All right. Well, we'll leave it there for today. Thank you to all of our viewers and listeners of the More Than a Broker podcast. We encourage you to come check us out on all of Spot's social channels, including at our website, spotinc.com. Thanks, and have a great day.